Brian Peery, one stock you like in the Hennessy Cornerstone Mid Cap 30 fund is JetBlue. Now, the airlines really have had a hard time in 2016, but they've seen a nice little lift since the start of July. Is it sustainable for JetBlue?
I think so. I think that if you look at what you want in an airline stock, you probably want a domestic stock because they're going to be less impacted by global terrorism. And I think that JetBlue fits that bill. It's a low-cost producer who's done a great job managing their network, building out, and the furthest they really go is the Caribbean, so they're kind of protected in that sense. Management has done a great job kind of moving upstream and going away from the cheap traveler, if you will, to the next segment and increasing their mint service and going after higher margin clients. And I think that they'll continue to do that and continue to build out profitable networks, and I think that they're going to do well in the next year.
And you're also bullish on Goodyear Tire. Now, this stock got slammed back in April after they missed revenue estimates on Wall Street. So tell me about Goodyear Tire making a comeback. What's going to get this thing rolling?
I think, you've seen some strong auto sales. I think you're going to wind up with them doing better in the European Union. I think that they've really got a branch out in Asia that's going to do well. The domestic market seems to be pretty solid. Right now you're buying this thing at a pretty cheap, reasonable valuation. You're eight times earnings. You're not looking for a home run here, but I think you can get that stock a little bit higher and get some good returns over the next year.
All right, here's a stock that I don't see too much. It's Express, and this is a retailer. This stock was above 20 back in April. Now it's around 14. So what's it going to take to get Express back above 20? Well,
I think that the Express really has their key market, which is the millennials, and they really kind of look at that 20 to 30-year-old group, and they've done a great job in pinpointing and what their desires are, and the trends change so quickly, and they've done a wonderful job of kind of expanding their online marketplace and going away from the retail stores more towards the outlets. I think right now it's a really reasonable valuation. Your downside from here is probably not much, but then your upside's back into the 20s pretty quick.
All right, finally, staying in retail, Casey's General Stores. This stock has been a giant over the last 2 years. It's up almost 100% over the last 2 years. They sell everything. I think they sell gas, they sell pizza. It's in the Midwest. What's going to take this thing higher because it's had a great run?
Right, and I think what's going to wind up happening is you're going to get a little bit more money coming into the coffers from the increase in gas prices. I think that in the Midwest, people are driving more. If you look at how much people are actually driving over year, it's increased quite a bit. And the Midwest are the ones who are doing it. So I think that Casey's will continue to do well. They're actually the 5th largest pizza delivery or pizza store in the U.S. and the 10th largest convenience stores, yet they just continue to make the numbers every quarter. Revenues might be a little tough because it is a big it's a big slog for them to drive that higher, but I think that if you look at the underlying fundamentals of the company, they're going to keep making more money, and I think that that's a cheap stock.
All right, well, thanks a lot, Brian.
Thanks for having me.
And thank you for watching The Street.